The other thing is people sometimes have a hard time really identifying the property over the last couple of years because the inventory hasn't been there. And so that's an issue.
What have you found to be the biggest frustration when it comes to capital gains tax deferral on the exit of a high-end primary home or even a 1031 exchange?
I think that investors sometimes don't want to do the 1031 exchange for a lot of reasons. They don't want to buy new real estate is one of them. As for older clients, are 70-year-olds, 80-year-old people, they don't want to be in real estate. So we try to offer them other solutions. Like there's some products, proprietary products out of like Morgan Stanley, people like that they have that they can go into. The other thing is people sometimes have a hard time really identifying the property over the last couple of years because the inventory hasn't been there. And so that's an issue. I would say the biggest reason people don't sell their property is they don't want to pay tax. I mean, I hear it all the time. I don't want to sell it. I don't want to pay tax. I'm like, well, we could sell it. 1031, you have no depreciation left. Okay, there's none you in 30 years property. There's zero depreciation. You probably don't even have enough insurance on it if the thing burned down. I guarantee you that they don't. Especially a lot of these buildings, and they have for a long time. And so take the money, reinvest, get that depreciation. In fact, now if you do it this year, you get what you have 100, you can accelerate it. So I think those are some of the main things. Like they just don't want to pay that. They don't want to exit and pay that capital gains.
Yeah, it's absolutely, it's massive, right? It's about 25 to 50% of the gain with the depreciation recapture, depending if it's an investment property or not. And I think it is the number one reason people aren't selling these days. In fact, the largest wealth transfer in the history of the planet is happening right now, and it's the baby boomers, and it's $32 trillion worth of wealth. In fact, 50% of that is tied to high-end primary homes, commercial real estate, or private equity or businesses. And those are illiquid assets that are highly appreciated. And they're about to want to retire, want to relocate, want to downsize, whatever it might be for their lifestyle, but they feel trapped by this huge capital gains tax. And so some of them just say, either I'm not going to sell, right? Or go find me that up leg, Maria, when, if you find me that perfect up leg, then I'll sell. And, or I have to move out of my primary home for a year or two to qualify as an investment property. And it creates all of these challenges. That's part of why we started Capital Gains Tax Solutions and offer, by the way, the Deferred Sales Trust for those who are curious, where we solve all of those problems. And you don't have to worry about timing restrictions. You can diversify the wealth. You can put it back into real estate whenever you want, if you want to. You can also just put it into securities investments, and you can live off of a cash flow income stream over a period of time and pass it to kids. And if people want to learn more about that, you can go to capitalgainstaxsolutions.com.